Okay, chapter 11. Chapter 11 is probably one of the easier chapters we've covered. So I think it was pretty clear in the book. I'm just going to go over some things you might see on the final and some homework examples. So the first item we're going over is regarding sales and sales taxes. So our first example, Bob brings up sales and sales taxes separately on its cash register. On March 7th, the register totals are sales, $20,000, sales taxes, $1,800. Prepare the entry to record the sales transaction and related taxes. So this one's probably very clear, right? We know our total amount we received is $21,800, so we can debit cash for that. Our sales amount, they tell us, is $20,000, and our sales taxes are $1,800. So all we had to do is add the sales and sales taxes together to get the cash amount. Second one's a little trickier. We know the total we received was $27,250, so we can go ahead and debit cash for that, and this entry would be on March 9th. So we can go ahead and debit cash for the $27,250. And then what we have to do is determine how much of that is due to sales, how much to sales taxes. All we have to do is take the $27,250 and divide it by 1 plus the tax rate. So our tax rate is 9%. So if we divide that by 1.09, we will get our sales figure. And that would be $25,000. So we're going to go ahead and credit sales, $25,000, and then if we take our cash we received, $27,250, subtract the $25,000 in sales, we get sales taxes payable in the amount of $2,250. And if you wanted to check that, if you took $25,000, multiplied it by 9%, you would get $2,250. So again, this will help you with problem 2 of the homework, but also keep this in mind for the final. Next one, and you want to keep this in mind from the final, we're given some information about Kate. First of all, her hourly rate is $20. She's received 2 weeks of pay, and her regular amount of hours is 80. She's worked 2 hours of overtime. She gets time and a half for that. So 20 multiplied by 1.5 would be 30. So her total regular amount of pay is $1,600. 2 hours of overtime pay is $60. So her gross amount of pay is $1,660. So we'll go ahead and record her gross earnings is $1,660. Now what we have to do is account for her deductions. Her FICA tax is 8%. So if you multiply 1,660 by 8%, you will get $132.80. So her FICA is $132.80. We are given both her federal and state taxes. Federal taxes are $400, state taxes are $100, and also a savings amount of $20. So we're going to deduct all of these items from her gross earnings to get her net earnings. So if we add the $132.80, the $400, the $100, and the $20 together, we will get $652.80. If we subtract that from our $1,660 gross earnings, we will get $1,007.20. This is her net pay amount. So you would do this, if you saw something similar on the final, you would do this in the same way. Last question, again, it's an example on page 1 at least. It's an example of homework problem 1. The only difference if you're calculating 2 notes payable in homework number 1, we're going to just do 1. But it's also an example of something you might see on the final. So on May 1st, Bob borrows $100,000 from A Bank, signs a 4-month 6% interest-bearing note. So let's go ahead and record our initial entry. May 1st, we received cash for $100,000. We're going to debit cash for $100,000. And we are going to have a notes payable for $100,000. So we'll go ahead and credit that for $100,000. So that's our first transaction. We are going to have to do adjusting entries for June 30th. The reason for that is, I'm going to erase this. The reason we have to do adjusting entries is we prepare some financial statements June 30th. So on June 30th, we need to know our interest expense. We're going to have to debit that, right? We've incurred an expense. And our interest payable, because we're not paying it yet, so we've got to record it as a liability as interest payable. So if you take the $100,000, multiply it by 6%, multiply that by how many months we have to accrue of interest, which is 2, right? The month of May, the month of June, 2 months. So 100,000 times 6% times 2/12 will equal $1,000. So we'll go ahead and debit interest expense for $1,000 and credit interest payable for $1,000. Okay, the next thing we have to do is record the payment. Well, when will this be owed? September 1st, right? It's a 4-month note. So May, June, July, August, September 1st. So on September 1st, we are going to have to, of course, debit the note payable because we're going to be paying it, so we need to get it off our books. So we'll debit the note payable for $100,000. We're going to have to go ahead and credit interest payable because we're going to pay it now. Debit interest payable, We need to debit that because we're paying it now, right? We need to get it off our books. So we'll debit the interest payable amount. That's $1,000. We're no longer going to have that as a liability. We're paying it. The last thing we have to do is figure out how much more we're going to owe for interest expense. We already recorded some, right? We recorded 2 months of accrued interest. In total, we will have 4 months of interest. So if we multiply 100,000 by 6% by 4/12, we will get $2,000. That's the total interest we owed. But we've already accrued 1,000 of it. We're going to subtract that 1,000. So that means we still have to account for $1,000 of that interest. So we're going to go ahead and debit interest expense for $1,000. We will credit cash for all of this, for the $100,000 note payable. Remember, because we're paying it off, $1,000 in interest payable and $1,000 of interest expense. So we're going to actually credit cash for the entire $102,000. So hopefully this explains that. Again, you will need to know something similar to this for the final exam, and it will help you get through homework problem number 1. The only difference being you will have to account for 2, I believe, 2 different note payable.